Well, CNBC-TV18 was the first one to highlight the pain in the microfinance sector owing to over-leveraging of customers. And the situation is unlikely to change in a hurry. In fact, this may well be the longest cycle of pain for the microfinance industry. So what's happened in the past year or 4 quarters? So several lenders have seen a decline in their AUM for Fusion Microfinance as well as Spandana Spurti has actually decreased both YOY and quarter-on-quarter. For 9-month FY25, CREDAC, that is Credit Access Grameen, ESAF SFB, Fusion Finance as well as Spandana Spurti have seen a decline in their AUM. Net interest margin of lenders with high microfinance exposures have dropped significantly or sharply year on year. Now, highest decline in net interest margin is seen for ESAF SFB, Fusion Finance as well as Spandana Spurti, while on a sequential basis, that is quarter on quarter, the highest decline is seen for Fusion Finance, Spandana Spurti and Suryodaya Small Finance Bank. Provisions have spiked up a lot for these lenders in the microfinance sector. Now, provisions as percentage of net interest income has increased for almost all the lenders. Provisions have risen on account of higher slippages. Quarterly annualized slippage ratio has jumped for all the lenders focused in the microfinance sector. Some of them have given double-digit quarterly annualized slippage ratio in Q3 FY25. Now, with recovery rate being on very low for the microfinance sector, elevated slippages would mean that there would be higher write-offs for these lenders. Hence, return ratios get impacted. So, return ratios have deteriorated for all the lenders over the past few quarters. Return on asset has fallen a sharply or steep decline seen for all the lenders focused in the microfinance sector. Lenders like Spandana Spurti, Fusion Finance have reported abysmal return on asset as well as return on equity. So from the date of our warning on the stress rising in the microfinance sector, the sector has seen massive underperformance to the benchmark index, that is Nifty. With respect to outlook, let's see what is this sector going ahead. Is that the net worth of some of the lenders have depleted significantly. This can restrain the AUM growth in the near term. Now, interest income of many lenders have declined sharply and this may continue in the near term. Hence, you can expect the net interest margin to remain under pressure in the near term for these lenders. Tighter net interest margin and higher credit costs will impact the return ratios. Loan recovery practice in Karnataka has seen restrictions by the state government. This can lead to further delay in repayment of overdues for the lenders, and that's why it can also impact certain key lenders in Q4 FY25. We also need to see whether the Karnataka issue has a spillover impact for other states or not. Now, Kotak Mahindra Bank recently said that pain in the microfinance sector may continue in Q1 FY26. So, post the asset quality woes, the pickup in business momentum will come into focus. So, an early end to the microfinance industry trouble looks unlikely.
Well, thanks so much for tuning in to CNBC TV 18. Make sure you follow us and stay updated on all our social media platforms.